Want to hold on to that $1,200 bottle of wine and dump that bar of gold. At least that's what some investors are doing. Wine and gold prices have tracked each other over the past decade as the quest for alternative assets really prevailed, but now the two are diverging. Gold down over 17% this year, while the LiveX Fine Wine Index up 6%. The LiveX represents 100 of the most sought-after fine wines that do have a secondary market. Now, Chris Smith over at Wine Investment Fund expects the index to rally yet another 8% this year, Betty.
So how does wine compare to gold, though, as an alternative investment?
Well, most importantly, it's not a stock, but a physical, or in this case, liquid asset. But unlike gold, there's a finite supply. While gold supply grows each year, certain wine-growing areas like Bordeaux are only allowed to produce a set amount. And that supply only falls as some of the wine is drunk, while the rest appreciates with age. And many wine funds, Betty, recommend, say, a minimum of 5-year investment horizon to really take advantage of this longer-term supply dynamic.
So as the global economy, Alex, slowly improves, U.S. stocks in particular trading at these record highs, what happens to these other investments?
Right, these so-called safe havens. Well, while investors are dumping gold for stocks right now, they could dump stocks for wine. Miles Davis of Wine Asset Management says wine prices have lagged the S&P and are still 25% off their old highs. So as the stock market keeps climbing, investors could actually rotate into those reds and whites. And you have seen some investors, Betty, take this bait. 5 cases of Chateau Latour in 1982 sold for almost $20,000 a pop at Sotheby's auction last week. And Business Monitor International sees wine value sales growing at a compound annual rate of over 10%, Betty, until 2017.